Alright, hope everyone's doing well. Been a little busy this week, so I have not made that many videos. I've traded some. I didn't really trade Monday, but I actually traded some here, and then I waited until the Fed days. And I generally like Fed days, just because if you wait for wait for it to get clear, such as something, here, buying above here, gives you a definite stop placement, and the possibility of a great risk reward. And you can see right here, gave you 2-to-1 initial. Before we even discuss any of that, I want to discuss, and this is just an Excel file. I want to discuss the trader's equation for a minute. And you have to remember that this is a math game. 100% math, it's 100% math. So let's think about this for a minute. Well, one thing I invite everyone to do for TradeStation users, I can click this, click Trade Manager Analysis, and from there I can select the range of however many days, weeks. I could do it currently today, and well, it'll show everything to your percent profitable, your risk reward, your so in other words, if I took, well, let's say you took 10 trades, and let's say we'll start with something easy. 40%, let's say you're 2-to-1, so let's say you make 200 and you lose negative $100 a trade. Well, in 10 trades, you would have made $20 a trade. That's not, it's a winning approach, but it's not that profitable. Same thing with your 60%. It's the same as having 1-to-1 and being 60% profitable. It's marginal. It's kind of the bare minimum. So, sorry about that. What I'd invite y'all to do is, number one, take a look at your math. Ideally you want to be in the 40 to 60% range. If you're in the 40 to range, ideally you want to be at least 2-to-1, possibly, here's 2.5-to-1. You can see from that simple difference, we went from $20 a trade to $40 a trade, 3-to-1, 60. You see, sometimes one thing to note is, well, in the past, it's easy, I tend to gravitate towards this range, the 50 to 40% range, and 2.5 plus risk reward. So I gravitate towards lower probability trades and bigger returns. A while back, my math used to be, I would notice I had a high number of trades in the course of a given week or two, and a very low probability, maybe 25%, and be like 2.5, say. Well, a while back when I noticed, I'm just kind of making up a scenario. Let's say this is in the course of 2 weeks, maybe 3 weeks, something like that. Well, what does this tell us? This tells me that this person is likely overtrading. This is what I did. I was overtrading. And for me, my risk reward was pretty good. It was 2.5. Could have been better, but it was good. However, I'm overtrading, which is taking away from my percent profitable. So if I could reduce it to, in half and maybe get closer to 40%, it's a big difference. So your math, by the way, in Excel, it's real simple. And it's not going to show me. So for profit, it's simply you see the equation up here. It's just taking an equal sign, this times this, and then plus basically this. Yeah, sorry about that. Okay, it's equal sign. Added this times this, which is these two, close it, plus negative. It's negative 100. That's why it's in the parentheses. This times 1.1 minus 0.4, which is the opposite of this. So what that does is, if I change the percent profitable, it'll change this. Profit per trade is basically, you can see up here. So anyway, let me give you an example. If you're 60% profitable and you're perfectly 1-to-1, you'll make $1,000. Well, notice this. It's kind of fun to play around with numbers. Take that same trade. What if you're 50% and you made 150? Well, even though you lost your percentage, you made more. Well, let's say you can get a 2-to-1. Clearly made more. So sometimes it's more advantageous, even if you have a high probability, to focus on increasing your risk reward, even at the cost of lowering your probability. So, even here, look at this. 2-to-1 at 45% in 50 trades is still more profitable than 1-to-1 at 60%. 1-to-1, 60% is marginal. It's profitable, but not great. It's the same as 40% 2-to-1. That's marginal. It's not great. So, even if you were, let's say, 70%, well, look right here. This is 2.5-to-1, so, this would be averaging 2.5 times your risk at 40% is the same as 70% 1-to-1. So, as you can see, let's say, well, let's put it this way. What's easier to achieve? Both will give you the same outcome. Let's just do 10 trades. Is it easier to get to be 60% profitable at 1-to-1, or is it easier to be 40% profitable 2-to-1? Obviously, it's this one. So, with that said, traders starting out should always work on getting 2-to-1 and then increasing probability. It's always easier that way. So, I'll put it this way. Let's say you average 150 a trade. So this is, 1.5-to-1, and you're 38% profitable. Well, let's just pretend for a minute that, hypothetically that I was in this situation. And I'm going to get to the day in a minute. This is important. Let's say, hypothetically, this is currently my average. So I'm losing money. Well, and we'll just do out of 50 trades. So what's the easiest way? Should I work on increasing my profitability, say to 1-to-1? Sorry about that. I don't know what's just happened there. Anyways, back to what I'm saying. Same at 50%, break even. Oh, duh, I feel kind of, whoops. I'm saying that, 51%. If I'm currently at a 38% profitability at 1-to-1, it's going to be hard to get to 51% quickly. And then I got to get to 55%. And out of 50 trades, I'll make $10 trade. That's really not that great. Instead, what if I just focus on getting 2-to-1? So notice I lose $24 a trade, $1,200 down. Well, if I get 2-to-1, it changed my risk reward. If I get 2.5, completely changed it. 40%. Look right here. So we're at $1,600. I just changed the trades. We're at $330, 2-to-1 at 38%. Well, look right here. Here's $50 at 30%. 5% increase. More than double my profit. Another 5% increase. Almost double my profit. 1% increase. Extra 35. 2%. 70. So the point is, math is everything. If your math looks like this, you're 175 trades and you're 25% profitable, and you're this, well, two clear things. Number one, your risk reward is okay, it's minimum. You need to get this higher, so you need to get in the 30% range, 30 to 40% minimum. Next, if you can't get to 40%, work on getting larger targets. So you understand, so let's just pretend you have a low winning percentage and you're at 2-to-1. How do we fix that? Well, let's look at the day. I need to look for trades that are great swing trades. So for example, this would be hard to take as a swing. Maybe I could do something like this. I could try and sell below, go for twice my risk. The easiest trade, buy here, stop one tick below, go for twice the risk, and you would get filled. Now, I would not hold through this. So, let me just go back on a few days real quick. Oh yeah, yesterday was kind of sideways. Okay, so here. This is limit order trading. Not easy. We're going down, we make a new high, and we turn down. By the way, this high touched this close exactly, but if you notice, did not make a new, still made a lower high. You sell in here, stop above here, new low, great risk reward. So, maybe today's really not easy. It's not easy for swing trading. Trading range day, maybe you sell, but then again, you're facing the problem of spike down, channel. It's not easy. So, kind of just gathering my thoughts for a minute. If you were, maybe buy here, you buy this close, stop below, and go for twice the risk. Or you wait for a trend line break and a retest and you get out below here. This is a lot of trading range price action, so it's hard to swing. Look right here, you had big down, big up, and sideways. Well, what does that tell you? It tells me a lot. Trading range, sell climax, buy climax, sideways. Next day, sideways. So I'm kind of all over the place, and I apologize for that. I hadn't really planned out what I'm going to say, just kind of jumped right in. So, look right here. A while back I was talking about lower highs, lower lows. Well, this day was the 14th. First off, Friday closed below the November low. The Bears, if you read Al's blog, the Bears needed one more bar. They needed a big bear breakout. They got a bear full reversal bar. That confirmed trading range price action likely and more sideways. For the Bulls had you can call it a bull flag, or the breakout of a double bottom. Here and here we broke above it, and problem is we closed below the neckline, so that's a good signal, more trading range. Here's Monday, I think, 14th. Whoops, here it is. Okay, so we tried to get follow through from the sell-off and the break below the neckline here in the low November here. Couldn't get it, and we turned up. Well, that's a problem. And then we closed on its high. It's a bull reversal bar. Now we're back in the middle of the range. So in terms of the Fed day, how would you swing it? Well, it's kind of a tough answer, but I would say here limit order market. So you have a wedge bottom, first, second, third. Do you buy above it? Probably not. It's probably doji. So the Bulls probably need a double bottom, breakout, pull back to a double bottom before they can get an actual good swing. They never got it. Here, we tried to break below wedge, couldn't really do it. Turned up, same thing. You can see sellers are selling up here, scalping out. So sell here, scalp out. Here's a low 2 at the moving average, low 1, low 2. Excuse me. But what do you really expect? Probably there's not two decent consecutive bear bars, so it's a trading range. It's a bear leg in a trading range. It's probably going to stall. Excuse me. It's probably going to stall, and as you can see, it stalled around the close of yesterday and went sideways, found support. So here's the easiest way to look at this 15-minute chart. A lot of dojis, sideways, and then we broke to a new high, pulled back, and rallied. Ended up getting a wedge top. So in terms of swings, maybe sell below here. It's not really that great of a swing. A lot of bears are selling this close and just scalping out 2 points, maybe more. Selling up here, scalping out. Selling, 1, 2 points above, scalping out. Trend line break. At this point, it's a good breakout. The Bulls needed some sort of double bottom, which they got here. Decent buy for double bottom, lower low, higher low. Can't really tell if it's a new low. Doesn't really matter. And we trended up, but of course, I would never be long or short or in the market during a Fed minutes or Fed announcement. Just too risky. And as you can see, 80,000 contracts. So, in other words, here was the good portion of the day. This is what swing traders were waiting for. So, we went down and then up. Did not close on its high. Bad follow through. Sellers are obviously selling. And that's kind of important. Here, buyers were buying every new low and making money. Pick a low. This low, could have made money. This low, could have scaled and made money. Same thing here. Could have bought this low, scaled in, made money. Could have bought this low, scaled in, made money. Could have made money all day for the Bulls. Bears, sell this high, make money. Sell this high, make money. sell this high, sell anywhere up here, made money. So here, what do you think is going to happen? Look right here. 82.75, 3, 4, 5, 6, 7, 8. Price went 6 points above the high. Here's the easiest way to work a little better on explaining myself here. Whoops. There we go. So notice, it's kind of a shrinking stairs. This high was 6 points. This high was more than 6 points. Point being, if you know this high was 55, about 7 points when we turn back down. Well, what if I sell 5 points above this high? That's 67.75. Well, that'd be right here. And I'm betting on the gap closing. Well, that's a pretty decent trade, especially at the end of the day. You have to be suspicious. Kind of curious, actually. Kind of curious to see. Well, point being, doesn't really matter. So, anyways, you know, in terms of swings, would not do anything here. It's a limit order market. You had bulls buying 50%. Yeah, right here. Buying 50%. Here's a decent stop entry for a test of the high. Maybe more. You know, maybe those bulls exit, but strong enough breakout. It's also 50%. Depending on how you look at it. No, not quite. Strong enough breakout that we may. This is a stronger breakout compared to the failed breakout here, so we'll probably get another leg up. So either bulls get out here, or you know, their stops down here, and they wait for 3 or 4 consecutive bars. You know, the worst thing you do is you get out here. You know, right at support. It's also went down, up, it's micro double bottom. If the bear shorted here, they buy again here. And, you know, where do they get out? Well, kind of same thing I talked about. If you know the odds are we're not going to go further than here, so why not sell somewhere up here? That's why if you're in the room, I'll talk about selling up here, because the odds were good. We'd get back to here and close the gap, which we did. So, and I think bulls have to get out below this bar. I don't really have a lot to say. Not, you know, it's kind of something, kind of last minute. Wanted to do this video. I hadn't done one in a few days, so I'll have some better content next time, some more to talk about. But other than that, well, let's think for a minute. Yeah, I mean, overall, I'd invite everyone to look at their math, know what their average probability is, risk reward. It'll give you a lot of insight. It'll give you a lot of insight to the type of trades you do best on, and you know, potentially what your weaknesses are or what your strong suit is. So it can tell you a lot, and it's really to me, it's far more helpful than back testing. Because here's at the end of the day, looking back on your trades is good, but if you don't know what to look for, it's really not that helpful. You know, if I go back and look at the past 100 trades, if I don't know what I'm looking for, then it's really, to me, kind of a waste of time. And don't take that the wrong way. What I'm simply saying is, if I'm losing money right now, or if a trader is losing money right now, and they're trying to figure out why, well, it's a lot easier if you can figure out, your percent profitable, your 1-to-1 risk reward, your risk reward. Did you average twice your risk, 0.5 times your risk? Was your average risk $100 and your average reward is $50? If that's the case, the odds are it doesn't, unless your probability is 75-80%, you're going to lose money regardless. So the first thing you need to do is increase your risk reward. If you're constantly losing money, and well, number one, if you look at your math and you're not 1-to-1, then like I said in the video, like I said here, 10 trades, we'll just do 50-to-1. And by the way, this does not include commission. So, theoretically, at least for TradeStation, okay, I don't know why I just didn't think of that. So, here I just put less com. This is minus commission. My commission is $5 a trade per futures contract. So, assuming you're trading one contract, well, you can see right here, I have to be 70% profitable at 0.5. So if I make $50 at every winning trade and lose $100 every losing trade, 70% I will break even. 75%. 10 trades, I will make $75. 1,000 trades. I guess that's not. Well, you see the point. So let's try this. 60%. 100. 10 trades. $150. It's $20 trade. It's not that great. 40%. After commission, that's really not all that great. So, you have to be aware. Like I said, if you're perfect 1-to-1, you need to remember this is pretty minimum. Like, this would be assuming you would never screw up and you'd make a half a point per trade. It's not good. So, first thing I would do is work on getting 1.5. That's a little better, even if you lose 10% in terms of profitability. Next thing I work on is trying to get 2-to-1. This, fantastic, if you can do this. As you can see. So, think about your math. If you're ever trying to figure something out, why you're losing, why you're winning, how to be more efficient, always comes down to the math. So if you're ever confused, look at your math. So, truth is, last thing I will say, and I want to say it every day, if you're losing and you can't figure out why, it's one of these 3 variables. Your number of trades usually will reflect this. So, whole point, know your math, because that's all trading is.